Discuss alternative minimum tax in the context of the exam and in real life. So when it comes to the alternative minimum tax, essentially really only applies to wealthy people, but you would really calculate both and then you just pay the lower number. And the reason why it was created was for people who are wealthy not to take advantage of that many loopholes. I mean, you still could, but there's like kind of three things that I've seen come up on the exams when it comes to AMT. So number one, when it comes to private activity bonds, right? So these are still muni bonds that are still federally tax-free, but you could get hit with AMT because of them. And those would be, let's say, if you want to build a stadium, a hospital. Those are really the two best examples. There was one more that I was thinking of that I can't quite remember, but stadiums and hospitals. So if you have a sports stadium, that is going to benefit the community, but it's going to benefit a company too. Same thing with a hospital, right? Like it's going to benefit the community, but it's going to benefit a private company also. And because of that benefit, they are going, they could be subject to alternative minimum tax, so they're going to probably pay a higher coupon rate, right? The other thing that I've seen come up on alternative minimum tax would be incentive stock options, which are called kind of the bargain element. So if you remember with ISOs, incentive stock options, if you hold it for 2 years from issue, which usually comes into play because the company will usually mandate that you hold it for longer anyway. But let's say you didn't have that, you have to hold it from 2 years from when it was issued and more than a year from when it was exercised, and then the whole entire amount, basically what you acquired the stock for, the strike, and then if you take the final sales proceeds minus the strike, that whole thing would be subject to long-term capital gains, right? Instead of having any ordinary income component. But then you avoid, you avoid the ordinary income, but now that amount could be subject to alternative minimum tax because of the fact that it's such a big benefit. So really, it wouldn't really apply to, it would really only apply to really big executives that just have a bunch of incentive stock options. For average people, it's not something to really worry about. The only other thing that I've seen on the exams reference when it comes to AMT would be when it comes to private activity bonds, ISOs, and then accelerated depreciation, DPP. So what is accelerated depreciation? So depreciation is applies to man-made products. So for example, if I buy a tractor and it's useful for $100,000 and its useful life is 20 years, I can essentially depreciate it by $5,000. So maybe write it off my taxes. Eventually, it has like a value of zero. So by doing accelerated depreciation, that usually applies to a real estate limited partnership. You can say that, hey, I use the tractor more, I use the property more, so I'm depreciated faster. That could be subject for alternative minimum tax. I wouldn't really go much deeper than that because it doesn't make sense in the context of the exam, but that's really what AMT is. Hope that makes sense. Please like and subscribe. Hope you have a great day.